Morning, everybody. Good morning, good morning. Welcome to Money Matters live only on onedealaway.com. My name is Nev, and I am excited to share with you what I have been able to uncover online when it comes to business, investing, finance, and all kinds of things that are important to us and our money. So, in today's episode, we're going to be looking a bit into the markets. We haven't done that in a little while. So, we want to see where the prices are, what the movements are, so that we can prepare better. We're also going to consider what's happening around the world when it comes to economic input, output, and of course, how the countries are making their money and what's going on within that. Because, when you look at just the stock prices, you may get a distorted view of what might be going on. But I think when we look at a bit bigger picture, a macro picture, as they call it, it gives us a bit of an insight of what might or might not make sense. And then we're going to cover some of the other important news and sort of predictions and talks. And that's going to be that for the beautiful Monday morning. Super excited to go and do this. So let's do it. And good morning. So here we go. So we're going to start with what's going on in the markets as far as the prices and stuff. So that's basically what the plan is to do right now. So let's take a look. We're gonna zoom in just a little bit so you can actually see it. I might have zoomed it a little bit too much, a little bit overzealous on my end over here. So hopefully you had a wonderful weekend and you're excited about what the week may bring your way. And if you're not, perhaps it's time to find a new thing to do. So let's see what happened Friday. As you know, markets are not open. At least these markets are not open over the weekend. So let's take a look. So this is basically Friday. As you can see, it was definitely in the green. Slight bump midday, but not much going on. And over the last week, as you can see, the market has been performing rather well. And then on June 5th and into the 6th, no, 5th only because, yeah, 6th was a Saturday. Haha. So Friday was a quite bullish day. If we zoom out to the 1 month, as you can see, we have been climbing rather nicely. And Friday, as you can see, I mean, we got well over 3%. 6 month, still haven't reached the top, but as you can see, this puppy is definitely going up. It is weird, but here we are. Let's take a look at S&P 500 and find out what's going on there. Not much different than the Dow. 5 days, same thing, same story, right? Looks eerily similar. However, for some reason, there because it's a 6 month. So in December it was 31.35, 31.93. So there you go. We are officially in the green when it comes to S&P 500. And as you can see, that's kind of where we are. Still a little bit on the red for year to date, but a nice move for S&P 500. Again, I can't explain it, and I will show you why. But nonetheless, that's what's going on. So Nasdaq, pretty much the same story. Equally as bullish. 1 month, even more so. 6 months, I mean, it's beaten the February high. So, well, not really. Where did I just see it? 98.17, 98.14. So not quite there. Year to date, high on high. So my oh my, look at this thing. I mean, it just when people are calling V-shaped recovery, I guess they were right because this puppy is definitely V, and it definitely looks like it recovered. Let's take a look at Russell 2000. If you don't know what Russell 2000 is, it's a small cap. So Friday, very, very bullish. I mean, it spiked up and it stayed sustained 1 month. Same thing, 6 months. We are still below, but it's definitely uptrend. 5 years, as you can see, V, but, we haven't reached the top quite yet. Let's take a look at what's going on in precious metals markets. I should drink some coffee. As you can see, it's been sort of dropped. It's been trading up, but let's take a look at what's going on with 60-day silver. I don't know if you can see this. You can't because it's not registering. So let's just zoom in. Let's just zoom in. There we go. Now we can see it. As you can see, 30-day silver is, it's been going up nicely. We do see this little bit of a slump yet again now in June. 6 months, we are recovering just about as much as the stock market. Let's take a look at gold and what's going on there. As you can see, it's trading below 1700, which is kind of something that I have been expecting. It's very interesting. It looks like we kind of come to the peak in May and then sort of started to going down. In 60-day, you can kind of see the side movement. Again, it's turning back downward. 6 month, we're definitely seeing some sort of slowdown, but it may not necessarily mean much or anything. However, when you look at it on a much bigger chart, well, I don't know that it's bigger, it's same size chart, but I'm saying longer term, longer range, 10-year, you have this beautiful cup formation, sort of this U-shaped piece, which typically, from the technical analysis, does show the potential of it actually going higher up, substantially higher than what we're seeing at the top. However, and the fundamentals are really, really good for the gold. However, I don't know, short term of what that might mean. Short term, I think we might see a bit lower prices. And here you can see a chart that 30 days were slightly down, 6 months definitely up, 1 year nicely definitely up, 5 years 44%, and since 2000, so 20-year, just shy of half 500%. So well done, gold. Well done, gold. Okay. So before we switch to sort of what's going on around the world, uh, Peter Schiff, who is very bullish on the metals, has something very interesting to say, and this is going to be a bit of a well, for crypto enthusiasts, just like me, you are potentially going to get angry at this stuff. But I think it's important to see other people's perspectives. So let's take a look at this. So Peter Schiff is basically, obviously we meaning the crypto enthusiasts. I'm going to put myself into that category, regardless of what Peter Schiff may call me. Hail Bitcoin as an alternative to fiat currency. I don't. It's an alternative. It's a great investment class. So I think digital currency is definitely the future. Whether it's going to replace the fiat, I don't know. Probably not. But I think it has a great potential as an amazing asset class to invest. It's been performing phenomenally. Charts are out of this world. And so, anyways, but he's basically saying it is not doing what it's designed to do, as nothing can be purchased with Bitcoin or any other cryptocurrency, says crypto skeptic Peter Schiff. I disagree. I vehemently disagree. There's plenty of things that one can buy. It's just that people are not buying things as much with Bitcoin, so they might switch. It sort of lets me know that Mr. Schiff does not understand how the crypto market works, nor that it offers a beautiful array of decentralized finance where you can shift from one asset to another, be able to leverage it, be able to do stuff with synthetics. So, well, then I might not be necessarily buying things with Bitcoin, although they are. And although you can, many people prefer to hold on to Bitcoin. They might transfer it into different cryptocurrencies and then use those to be able to actually buy things, earn things, and so on. So it's silly. I disagree with him, but he's saying only fools are choosing Bitcoin, and I guess there's a lot of fools out there that have been receiving rather nice returns. Again, we don't know what the future holds, right? But we don't know what the future holds for anything. Like everything is uncertain these days, so there's no guarantee that one thing is going to be, performing great or poorly. There's no guarantees. I think there's only probabilities, especially when you're looking into the future. But the interesting here's this is my favorite piece of the whole thing. So I'm gonna say it again because I think it's interesting. Schiff said recently that only fools are choosing Bitcoin, and then in January, he basically was complaining and saying that he couldn't access his Bitcoin holdings after his digital wallet stopped accepting his password. Then he completed with, I knew owning Bitcoin was a bad idea. I just never realized it was this bad. So, an interesting piece about it. Let's break it down just for a moment for my own personal satisfaction, and then we'll shift. Uh, I guess there's a pun in there. But it's really interesting that he's saying only fools are choosing Bitcoin, yet if he's complaining he can't get into his wallet, that means that he too is a fool, right? Because if he is trying to access a Bitcoin wallet, that means he has Bitcoins. And if you don't believe in it, why the heck are you buying it, right? I mean, am I wrong? So this is the part that is really interesting for me. That I can't. It's just too much. It's just too much because like if I don't believe in something, I'm not investing in it. I'm not buying it just so that I can prove that it's wrong. Most people don't invest that way. Most people, when they invest in something, they are hoping that it's going to go up. They're doing analysis, thinking that it might go up because technicals are good, fundamentals are good. Hopefully, both are really good. There's an adoption in the market. So there's all these different reasons why you would invest. You would never put money in just to prove that it's wrong. So if he truly believes that Bitcoin is that horrible, Peter, why in the world are you buying it? That's all I want to know. Okay, all right. So since we are on the crypto news, let's talk about. We talked about a little bit about it, but I think it's important to mention, especially now as we go and just talked about uh, Mr. Schiff and his grossly wrong analysis that he himself is proving that he's wrong because again he's investing in something that he doesn't believe in, so he's either lying or he's a complete idiot. So I don't know, let me know what you think in chat and I'll come in and check in with you. But if you're watching this on YouTube, you're clearly missing the ability to live chat and banter back and forth. But let me know in the comments of what you think about this whole thing. Bitcoin is actually nicely up at 97.50 almost. So we'll see how it goes. The European Central Bank is anxious to extend its role in creating central bank digital currencies, but doesn't mean that private entities can join the effort. This is coming from the President Christine Lagarde from ECB, right? ECB must be ahead of the curve with regards to CBDCs, centralized digital coins, right? The ECB established the Digital Currency Task Force a month ago that would work intimately with Eurozone central banks to know the advantage and disadvantage of potential Eurozone CBDC. Worldwide interest for CBDC came soon after the uncovering of Facebook Libra. If you remember, this was quite a few months back when this was announced. Everybody was freaking out, and of course, the race to beat everybody had started. But I think government's a little bit too late. Even though they've been talking about it, they haven't been taking much of an action. The People's Bank of China has been developing digital yuan for years, but just recently they started to disclose it, and they're actually starting to test it. So the mad rush into the digital currencies is definitely happening, which gives me yet another reason why I am ridiculously bullish on Bitcoin. Uh, so Mark Carney, the outgoing Bank of England governor, stated a year ago a multi-fiat backed CBDC could well supplant the US dollar as the prevailing worldwide reserve currency. IMF chief economist Gita Gopinath, hopefully I have said that right, my apologies if I haven't, contended digital currencies, including CBDCs, needed a major framework and worldwide acknowledgement to effectively handle the greenback. So, it's a competition against the dollar, with the dollar to sort of supply the dollar. So it'll be really interesting. I know that the Fed is looking. So I think every central bank is looking at potentially creating stuff, and it'll be interesting if there's going to be all these micro individuals currencies that are going to exist and potentially replace the fiat. And it's not going to replace it, right? It's just going to be in a different form or format. Which is not very different than we have today, right? Swipe, swipe, swipe. So currencies could, the digital currencies could address huge numbers of the issues with the legacy financial framework, which I agree, but they also might showcase new risks to the clients. So again, I agree with it. There are some risks. It's still pretty new, but you adapt and change as you go with it. So I think the policy and protocols behind it are incredibly important, and that's where quite a bit of risk can actually exist. Um, she communicated concern Facebook could utilize its digital platform to lock out competitor stablecoin operators and thus gain an unfair advantage. I absolutely agree with that. Now, since we're on this stuff, let me see. Can I click on Bitcoin? No, I can't. Because I wanted to take a look. Nope. I wanted to take a quick look into what the price of um, Coin Gecko. I wanted to see what the price of Bitcoin is live, and I didn't pull it up, so my apologies for that. But let's take a look together. Since we looked at everything else, let's take a look together as to what's going on. So let's take a 30-day of what's been happening. Hello? Nope, not gonna let me. All right. How do we change this? This is just giving me 1 day. Come on, man. 5. Let's see. Is it going to do it? Yes. All right. So quite a bit of side movement. Not much, exciting or any of that stuff. Oh, there we go. So we can take a look at the 90-day right over here. Beautiful bullish trend. Beautiful, beautiful, beautiful. 1 year. If you take a look at it, we are. What was this? 8,000 something. So we're definitely up and moving on. Obviously, when you take a look at the max, you know, it's definitely moving in the right direction. This is my personal opinion. Uh, it's moving on up quite nicely, and on the logarithmic basis, this puppy is absolutely amazing. So, I welcome those that fight it because it's important to have arguments and see different people's points of view. And but I also have my own point of view, and we can agree to disagree. So only time will tell whether people like Peter Schiff, who have purchased and then because they can't log in have gotten angry, I think, or truly don't believe in it, or people that actually believe in it are right. So only time will tell of who's right and who's wrong. So I'm excited. I put my mouth where, or put my money where my mouth is. And so when I say that I believe in something, I buy it. When I no longer believe in it, I don't. So now I want to go around the world, so to speak. Well, it's not going to be completely around the world. I want to look at some of the larger economies and look at what's going on the much larger basis. Because when we look at the markets, when we look at what's going on in a very small sort of fashion, it's hard to see a big picture, right? As they say, you can't see the forest for the trees. And so I want to make sure that we take a look at what's going on in a macro picture to have a better understanding of where are we heading, what is going on, what can we expect. And I think we all agree that the market, meaning the stock market, is not accurately representing to what's going on around the world. But I'm happy for people who are making money in the equities. 100% happy for folks. I'm always happy when people can make money, as long as it's legal and ethical, of course. Okay, so China. China exports turn negative again, and imports plunge to new lows amid crisis. So, after showing the first signs of growth in April, Chinese exports fell again last month to 206.8 billion, contracting more than 3% compared with the same period a year earlier. Still far better than economists expected, but which had forecast a 7% plunge. Uh, May's year on year fall of 3.3% is still a steep decline from the surprise increase posted a month earlier when exports rose 3.5%. This is interesting piece because, they're looking at it and saying, well, we've expected this to be worse, but then they reopened and we were kind of surprised to see a bump. And the reason this is important for me to look at it, and I'm looking at China first, is because, when you follow the pandemic, which is not necessarily what caused a financial issue. We've had financial issues before, but it definitely amplified it. They were the first one to kind of go down. They were the first one to shut down. From here, we'll actually move on to Europe and look at the Japan and stuff, and then come to US. But when I look at this stuff, it sort of gives me the whole like they were shut down, nothing was happening. Then they opened. That first month was incredibly bullish, and then it just went right back down. And I am thinking, because when we look at the US, for example, we got the reports that the unemployment started to slow down, right? The number started to slow down, which was is lovely. Then we saw that the number of people that were employed has gone down, which overall sort of equalized or lowered the impact of number of people that are unemployed. But we are in the first month of just reopening, so we potentially could see this spike, and maybe then in the month of July may see that we're actually going back down. So that's going to be an interesting piece, and who knows if it's going to affect equities. Typically, in the normal world where things are connected, it would, but in today's day and age, it might not. So who knows? Who knows? Uh, Imports remain severely affected by crashing demand as they fell by 16.7%. It was earlier hoped that year on year purchase could recover from the 14.2% plunge recorded in April. The previous better performance of China's foreign trade came as factories rushed to fill a backlog of orders when they were allowed to reopen after weeks long coronavirus quarantines. While the virus is mostly contained in China, which was the first country to be hit by the outbreak, it's still raging in other parts of the world, disrupting supply chains and crippling consumer demand. So, it's one of those things that I think. I mean, it's absolutely right. Who do you trade with when everybody is shut down, right? And I think that this is an important thing to think about. This is obviously a macro, large picture because we're talking about a country, right? A rather large country, one of the largest, if not the largest country in the world, at least today, right? Obviously, that's going to change 5, 10 years from now, but everything is. Uh, it brings me back to the whole like when we look at that at a company level, right? So I was reflecting a little bit last night on what's going on with the stock markets and those kinds of things, and I was thinking of stock price, right? Is or at least should be based on earnings. Earnings are based on productivity. Productivity is based on having the employees, and you have to have employees in order to be productive, right? But in order to make income and make sense of the employees, you have to have people buying stuff, right? So it's all like really interconnected. And the problem is that I don't know if people are buying stuff as much. Well, if they're not buying things, then the company can't hire as many people. If they can't hire as many people, and they're not as productive, or they're losing money, or they hire a whole lot more people, but nobody's buying stuff, now they're actually starting to lose money. And so it's sort of this vicious circle that keeps going back and around that almost makes me think that perhaps we will see a drop, another drop in equities market. Again, I could be wrong because Fed is printing so much money, although they are slowing down in what they're printing, but they are still printing that money has to go somewhere, and so typically it goes into the assets, it goes into the equities. It has a high potential to go into real estate. So when I look at that stuff, it makes me wonder of the that maybe, just maybe, it might continue to tinker on up. But I just have a hard time seeing that people would buy stocks. It doesn't make sense, right? That you would buy stocks in companies that are not performing, that are not providing revenue, that the earnings per share are like negative, and yet people are buying it. And so I don't know if I just don't understand how the economy works anymore, potentially, or if people are just like Peter Schiff, they buy things that they don't believe in, or if people are just not understanding how things work, or as many people have stated that equities trade on the future hopes, that people go in and jump and saying, well, I'm just going to buy it now, and I know I'm losing money today, but 5 years, 10 years from now, I could be winning. Well, that sort of becomes akin to me, as somebody who's more of a real estate investor, not necessarily equities investor, is sort of akin to me of people who go in and buy properties in really expensive markets, and then they try to rent it, and then every month they have a negative cash flow, a few hundred or a few $1,000s. That doesn't make sense to me. That doesn't make sense to me from as an investor, as a business owner. It makes zero sense to me. But people do it every day. So maybe that's what we're seeing in the equities market. All right, let's finish with the China. The widening gap between imports and exports drove Chinese trade surplus to 62.9 billion, and the surplus with the U.S. alone is reaching 27.9 billion. So, this is going to be interesting for sure, and we're going to definitely have to watch what's happening and transpiring. All right, since we're in China, let's take a quick flight to Japan. Coffee time. Okay, so Japan is bracing for worst post-war economic slump. Pandemic test positive, test policy responsive. Pandemic test positive. Way to go, Nev. Okay, Japan's economy braced for its worst post-war slump, even as first quarter GDP contracted less than initially thought. So what's going on in Japan, y'all? Banks are doing their bit to help lending, as lending rose at the fastest annual pace on record in May. Assigned companies were tapping loans to meet immediate funding needs to survive slumping sales from the pandemic. While U.S. and European policymakers have shifted from crisis response to effort to prop up growth, Japan is struggling to do so as it continues to focus on preventing second wave of infection. Economy Minister Yasutoshi Nishimura said Japan should primarily focus on backstopping faltering businesses, suggesting the central bank should avoid pushing interest rates deeper into negative territory. They're already negative, in case you didn't know that. Efforts to stimulate consumption should wait a bit more. And they have to stimulate consumption because that's how companies make money. The world's third largest economy shrank an annualized 2.2% in January through March. Monday's revised gross domestic product GDP estimate confirmed Japan had slipped into recession, which is defined as two straight quarters of contraction for the first time in 4.5 years. And we've called it a recession, potentially depression, quite some few months ago. And I told you you wouldn't even hear about the recession and calling it that way until at some point this summer. So there you go. Get ready that those reports are going to start coming in. And now it makes me think, is that when the investors are going to be like, wait a minute, we're in recession, sell, sell, sell. So we'll see. It's going to be interesting for sure. Senior economist at Oxford Economics concurred with the bulk of the impact from the coronavirus pandemic to be felt in second quarter. The outlook for 2020 thus remains extremely challenging. Recent data, including exports, factory output, and jobs figures, suggest Japan is facing a worse post-war slump in the current quarter. The economy is expected to recover only moderately in coming months. So, right, like short term, not much happening. Long term, yeah, we're going to see it. And then long term, yeah, we're going to recover. Absolutely. So the surge in bank lending suggests companies are being forced to hoard cash just to stay afloat, and the worst is yet to come. Japan's parliament will begin deliberating on Monday, which is today, a second supplementary budget to fund part of fresh 1.1 trillion stimulus package that include loan schemes and framework to inject capital into struggling firms. So, everybody's doing the same thing. This is one of those things that I want folks to understand that everybody is doing the exact same stuff. And, it's you saw it in China. U.S. is doing the same thing. I mean, country after country after country after country is doing the exact same thing. It's almost like they all have the exact same book that they are using and utilizing, and we'll see if it's actually going to work or not. Again, I think it's going to be definitely interesting. Now, let's take a look at what's going on in Germany, and then we'll finish with US. So, cost of lockdown, German industrial output suffers record plunge. Production nosedive 17.9% compared to the previous month, while the year-on-year drop was as much as 25.3%. That's a huge jump, y'all. I mean, not jump, jump in the negative, Nev, not jump, drop. They're basically saying that the output has faced its biggest drop since the data was first published in 1991. So while the sharp drop was mostly expected, analysts earlier predicted that it would not exceed 16% in April. The key industries, auto industry was hit the hardest and saw a decline of over 74%. Ouch. Like that really hurts. Imagine losing 74% of your income or your business, or 74% of anything. That's really, really steep. The construction sector contracted, was this another one, right? Contracted by over 4%. So when you say 74% and then you say 4%, you were like, they're fine. But, construction is also really, really big because that affects the housing sector, which affects many jobs, which in the housing sector, if you really think about it, construction, right? So they go in. It also affects the supplies, which is the products. Because if you think about what is a house, right? It's a piece of land with a bunch of commodities on it, right? You got to have copper, you got to have, lumber, you got to have all of these different supplies. And so when the construction drops, all of those other pieces are affected as well. Same thing with the car. What is a car? Well, it has a bunch of conductors and computers and all these different parts and rubber and all of that stuff, that everything is affected. So when a car is not being made, there's no need for any of those things. So it's not just jobs and the factories and people running that stuff, but it's also all the other supplies and parts that kind of come into it. And if you think of a tire, right? Then you have the rubber and you have all the other pieces. So now the rubber factories are going to suffer and the rubber producers are going to suffer. So it's a trickle down effect that is definitely being felt and is going to be felt, right? So when you look at some of these big things, you got to think of the small stuff that also it affects. The good news is that the low point has been reached, according to the ministry, and the economic recovery is beginning now. One of the largest German think tanks, the IFO Institute, expects the national industry to decline further in the coming 3 months, albeit at a slower rate. So there you go. This is kind of what's coming out of Germany. And now let's talk about United States and what's going on with the lending, right? Uh, it's one of those things that is really interesting to me. And it's a huge risk, right? But as a business owner, sometimes you have to take risks. But I think what the government is proposing is for businesses to take these unprecedented risks that tape over of what's happening with the businesses and with the economy, so that today it feels really good, but it has a long-term negative, potentially negative impact, 6 months from now, a year from now, 4 years from now. And that's the part that actually scares me quite a bit, because yeah, we're going to make it better today, but if better today has a huge negative impact on tomorrow, I'd rather suffer today and then let's recover and let's move on. But they're doing something very interesting, and you'll see it in this article. We've seen it with the small, medium, and small size businesses with the PPP and that kind of stuff. Now the mainstream is coming. So the Federal Reserve's most ambitious and complicated crisis relief program is set to launch in coming days. They're talking about. The main, I think they call it what, the Main Street Lending Facility. It sounds nice, doesn't it? It's not so nice. Lenders are saying that they're concerned about the balance sheet risks they could face by participating. I'm seeing very limited interest because of the large minimum loan size of half million, and this is coming out of the vice president at the Independent Community Bankers of America. Program aims to provide credit to businesses that are too large for the PPP, which targets companies with fewer than 500 employees, and too small to directly benefit from the Fed's corporate bond buying program. So it's basically, you're not big enough to for Fed to buy your stuff. I had a different word that came up, but I didn't want to say it out loud. And you are too big to benefit from the PPP loan, right? So the mainstream facility loan will be distributed via participating banks, but unlike the PPP, those loans are not forgivable and will have to be repaid. Administered by the Federal Reserve Bank in Boston, they will lend U.S. businesses with up to 15,000 employees and revenue capped at $5 billion. Loans range in size of half a million to 200 million. Borrowers have 4 years to repay the loan. So this is interesting, right? Now, the more than 38,000 companies employing about 30.2 million people could make use of the program, including more than half of the S&P 500. This is going to have a huge impact on the markets yet again, both short and long term. Mainstream program has already tracked controversy. Many companies have grown wary of the scrutiny that comes with tapping federal aid, especially after many publicly listed companies were widely criticized for taking PPP loan. The Fed plans to publish the names of the lenders and borrowers, the amounts borrowed, and interest rate charged along with other details. So, most of these companies are publicly traded, but there may not all of them be. Some of them might be very private, and it's really weird that, like your business, for publicly traded companies, it makes perfect sense. But for privately owned, it's nobody's business of what I'm doing with my business. I don't know. That's just kind of how I feel about it. So that feels really weird. The other part is that, yeah, there was a lot of controversies when they were saying everybody can borrow, people will borrow, and then everybody's like, hey, wait a minute, why are you borrowing? Now, some companies maybe didn't need it, but when pandemic hits and, they're offering free money, like everybody's going to raise their hand. Like if I said, hey, I'm going to give $1 million to all of my viewers, just send me an email. Well, everybody's going to freaking email me because it's free money. Of course, companies are going to do it. So, part of it is you can't necessarily blame the companies because we're hitting all of this stuff and what's happening. And the Fed is saying, like, hey, here we go. Million to you, and million to you, and million to you. Everybody gets millions. Everybody gets millions. So it's very interesting to kind of see this stuff. And, it's going to be interesting to kind of what happens. Now, some businesses may also hold off from applying until they get clarity on the conditions that the Fed will impose on borrowers. There are some limitations right now, including executive compensations, dividends, or stock buybacks will also put some companies off. So um, this makes absolute sense because when you borrow from the government, typically, not always, but typically, it doesn't come really free. Those PPP things, not really free. EIDL, not really free. Small business loans, definitely not free. Because when you borrow from like a place like SBA, for example, you pledge every single one of your assets. And if anything happens where you can't necessarily pay back, not saying that you don't want to, most people want to, but you can't pay back, they can come in and as a small business, they can represent your home, your entire business, right? So people don't always think of what assets they actually have in their business. And recently, I talked to a friend who actually utilized SBA loan, and it didn't necessarily hit them up until at some point where as they were starting to like really reflect on like, oh crud, what did I do? It was nice short term because you panic and you want to save your business, because business, when you build it and you've been building it for 5, 10, 15, 20, 30, 40 years, your heart and soul is in it. I mean, you poured everything you got into it, and it's really hard to say goodbye to that stuff. So you'll do anything to preserve it, including engage in potentially getting SBA loan, which could potentially be risky, because it's one thing when you borrow money and you are able to know that, hey, I can put this money at a good work and I'm going to be able to generate more cash. But when you borrow money and that money kind of sits there and there's no necessarily perspective of when you're going to be able to start making money, earning money, right? And you're just kind of sitting there and you're eating at it, eating at it, eating at it, eating at it. You come to the point where you run out of the money that you borrowed. Now what? And money's still not coming in, right? Now what? Well, now you're in debt and you don't have any income coming in. So you have a few options: borrow more or bankrupt. Now, if you go for bankruptcy, right, there could be potentially some restructuring, but typically SBA has not necessarily been known as the easiest place to do this stuff with. So you potentially might need to borrow more in the hopes that maybe at some point money is going to start coming in. So, anyways, there's a lot of things that are part of the assets when it comes to the business, including your list of the clients and things, right? Including your digital assets that you have, like websites and trademarks and books and copyrights. Like all of those things are assets, y'all, right? So, anyways, let's continue. They're saying loan size is too large. I still don't understand why a minimum is even needed. Because some people are saying like it's way too much. It's a half a million. Can we put it at 100,000, or don't even put a minimum? Like let people borrow what they need. So large and small banks are also worried about the risks that they could face. The Fed will purchase 85 to or 95% of qualifying loans, depending on the type, and the bank will keep the rest of the loan on its balance sheet. And some of the smaller banks are saying this is too much, and we can't necessarily do this because we're taking a lot of risk, and we don't necessarily want to do it. So there you go. That's kind of what's going on, what's happening in the world of economy and markets, and so it's definitely one of those things that I would say is interesting of what's going on. Let me know what you think and how you're thinking. And now we're going to end the live broadcast, so to speak. We're actually going to end the recording for everybody on YouTube and join in everybody who is live for a chat. So if you are watching this on YouTube, you are clearly missing the entire show. So make sure you join me tomorrow at onedealaway.com. But if it's too early for you, then at least do subscribe to the YouTube channel so that way you get notifications. Click the button so when the new video posts, you get notifications and you don't end up missing a thing. And thank you for watching. Until next time, stay forever money blessed. And to remember, you are only one deal away.